Vishal says, Buffett is still buying Occidental. I don't know why when the future is electric. Yeah, I can see why Warren Buffett is buying Occidental Petroleum. This company has somewhere around a 15 to 20% free cash flow yield right now. But again, I don't know if it's going to remain that high. If you go and take a look actually. Was I still sharing my screen? Sorry everyone if I was. Okay, if we go take a quick look here. Let's do this one. If we go to OXY, sorry for my slow internet. This always happens when I stream. And we go to the free cash flow of this business. So down here, you can see that in 2015, it was actually producing negative free cash flow. And then it went up to about $3 billion in cash flow. Then it went back down to about 468 million during COVID. And then really, it's been recently that its free cash flow has gone insane, up to about 12.3 billion. Now it's starting to come back down to about 8.4 billion. But this is kind of what I mean about these oil companies, is their cash flows are so volatile based on what the price of oil is doing. I believe back in 2008, oil prices were quite high as well. Occidental Petroleum at the time was producing about 7 billion if we went around up. So that's what the company has historically produced in decent oil markets when oil prices are high. But then when oil prices go down, the business produces maybe $1 billion in free cash flow, potentially even negative, to about 468 million. So I don't know for sure what Warren Buffett's investment thesis on this business is, but let's say Occidental Petroleum, its free cash flow goes back down to $5 billion if oil prices go back down. So its market cap today is 57 billion. If its free cash flow drops down to about 5 billion, then it would be trading for about 11 to 12 times free cash flow, which is very different than its price to free cash flow of what today? About 6 today. So if depending on what oil prices do in the future, the price of this business today could dramatically change, essentially. And if oil prices go back down quite significantly, then historically this business has produced anywhere from like $1 to $2 billion in free cash flow. And on a $50 billion market cap, that would be 25 to 50 times cash flow. So it looks cheap right now, but depending on what oil prices do, its price could totally change in the future. And that's what makes me nervous about these businesses. I just don't know enough. So that's kind of why I stay away.
Yeah, very fair. Captain Strange here. Also, not sure if you were with us since the beginning, Captain Strange. We did give a shout out to your comment on the last video about Expedia and MGM. I just want to do some more research there. I think that's a great suggestion. So sorry that we haven't gotten to that one yet. Really good point here, though. Oxy has access to carbon capture plants, which allow them to get carbon credits from the government. Could be worth 150 billion a year by 2050. So I love the long outlook there, and yeah, it just goes to show how complicated some of these businesses are. Daniel, I think everything you were saying makes a lot of sense, and now there's also government credits that come into play as well. So definitely something to be aware of when you're looking at those businesses.